News18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me are Sonia Shenoy and Anuj Singhal. Well, this is the second day that the cat is away, and so maybe some mice will be at play. But a little bit has changed in the global markets over the last 24 hours, and key among them is what the ECB said. ECB's Draghi said that he's going to increase the quantitative easing, the stimulus. The ECB gives stimulus basically by buying bonds which are issued by the respective governments. They were buying 25% of the bonds that were issued. Now they are ready to buy up to 33%. Now, this can make a very big difference to the amount of liquidity in the system itself. And I remember when the first time the quantitative easing was announced, the LTRO was what they call that, long-term refinancing operations. At that time, we saw a rally come out of nowhere. Now, of course, since then, quantitative easing by Draghi was much more pronounced, and therefore this may not have the same impact, but we must not take it lightly. We saw the euro itself fall overnight by about 2% or so versus the dollar. So dollar strength could be on the cards. And this is coming at a time when you have the ADP, you know, the one that comes before the non-farm payroll numbers, giving us a 190,000 job creation number. There are times when the actual job creation is different, or rather much different. Now 220,000 is what the expectation is that the US will create. So there are the makings of strong dollar and weak commodities, a combination which normally helps us. So we have to wait out for the trend to play out. The quantitative easing announcement, it's not a small announcement. It's fairly major when you go from 25 to 33%. We have yet to come to terms with it, and we will see it play in the days to come. And it will come at the same time when probably the Fed will tighten. So liquidity easing by one currency and tightening by another. Will this move itself deter the Fed? That could also be a talking point in the days to come. So, you know, we are going to live in interesting times as far as currencies are concerned. We are too close to the event to be able to gauge its full impact. All that we can say is that we have 6 more hours to play before I think the markets will start lightening positions. Probably.
Oh, yes, I think that would be the way to go. I mean, if you were in the market, then you would, of course, not want to take any aggressive bets ahead of the US non-farm payroll.
To take some money home is what I would think.
Yeah,
but
which is the last data point before the Fed policy in September, right? That's the last jobs data, important jobs data.
The last big data. But as Steve Leisman, you know, made a assessment, I think yesterday. His point was there is also the CPI data which comes out on 16th September. And inflation is important. Ultimately, the Fed's target is that you have to reach 2% inflation. And if you get a dramatically negative number, that can impact some of the Fed voting members. But volatility, according to him, is way more important. While all the data is important, in his assessment, and I would believe because he's the one who gets there here in Jackson Hole, he attends the meeting. So he says market volatility of a very severe kind does impinge on the Fed's action.
Okay, well, let's see what happens in our own markets, because yesterday it was the same old, same old. I mean, selling by the FIIs and buying by domestic institutions. But there was some delivery-based buying that we did see in the banking space, in the private banks, you know, the likes of ICICI, Axis Bank, etc. So perhaps we could see some of that continue. Anuj, hi, morning. It would be an interesting day because not too many people would want to leave their positions open ahead of the non-farm payroll data. But how do you see it proceed?
Morning, Sonia. See, before talking about today's trade, just a word on yesterday's trade, because you know the bounce did sustain, but it was on very low volumes yesterday, both in the cash market and in the F&O market. But the sense I get is that the short covering bounce may have some more legs to go. The Nifty yesterday, you know, maybe added a bit more than it should have had, and that's the reason that the SGX Nifty is indicating that maybe we retreat a bit. But that could be an opportunity for some traders to take intraday long positions. Now you have to differentiate between taking intraday long positions and taking positional longs. This is not a market in which you want to short when the Nifty opens 25 point down. If the Nifty opens 25 point down, that is the first point, because SGX Nifty on days like this with low volumes may not have too much meaning. So let's see how the actual opening is.
You actually expect it to open gap down?
25 points it's showing. It's not really a gap down, but it's a decent you know, downtick for the Nifty. Now, FIs yesterday sold 400 crores in cash market, but DIs bought about 840 crore. And, it's telltale evidence clear that, where the buying was. It was half of that was in HDFC. HDFC alone contributed 21 points to the Nifty, and some of this was in private banks, stocks like ICICI Bank, HDFC Bank. It was clearly visible. A lot of people would say that, you should be happy that at least you're getting some of the family silver back from FIs and some of the DIs are owning it. So that's for the long term. But I'm looking at the F&O data. That makes me a bit more comfortable, at least about today's trade, because yesterday there was quite a bit of index futures buying, about 450 crores, and I was looking at the internals. FIs added 22,000 index longs, and they only added 2,000 shorts. And from domestic side, on the rally, there was quite a bit of lightening of positions. That normally is an indication that the rally may continue, because when the weak hands get out and strong hands add long positions, market normally rallies. The other data point to watch is the index options buying. In that, there was not too much of index option buying, but what did happen was 1.1 lakh index puts were bought from FI side, and 7,200 and 7,300 puts have been bought with ferocity over the last few days. That's why the premium here also surged. Yesterday there was quite a bit of decline in premium because the market rallied, some sanity returned, and that's when it was used to buy 7,200 and 7,300 puts. Now, why are these puts bought early in the series? These puts are bought to prepare for a Sigma event. In case the market has to see the kind of volatility it did in August, and if the market has maybe 1 or 2 bad days, there's a possibility that the market has 1 or 2 bad days, then maybe these puts come into play. Otherwise, these puts won't come into play. But the short point that I get is that during the day at some point, you should see a decent rally, because again, China is not there. Last hour will be crucial, because in last hour, you need to take into account 2 factors, not just the US data, which will be an important point, but you also have to tell yourself in the last hour of trade that Monday morning when you come, before your market opens, the Chinese market will be trading after the 2 days holiday. And you don't know what will happen at that point. And you don't know what would be the equity mood at that point on Monday morning. Do you want to take that risk? On anecdotal evidence, the market has taken that risk. But that was the market which was in a bull market. Now this is a market which is going through a bit of a bear phase. This is a market which is going through a bit of a correction. In this correction, does the reverse psychology apply? Do you use rallies to actually sell? That, I think, would be the key point for me in the last hour of trade, and that's why I think today's last hour is going to be absolutely fascinating in terms of trade to watch out for.
Okay, I'll just leave one more issue on the table. My mind goes back to the September of 2013. The roiling started, although the taper word was used on May 22nd, roiling started in end May, early June, and markets roiled all the way up until end August. But suddenly end August and the first week of August was a sea of calm, and after that we saw a rally which was quite unprecedented. Of course, we had the Modi factor, we had the Rajan factor, we had several other things also helping us, but when the roiling stops, the amount of bounce back can be pretty decent. And there was some data which Barclays put out about when the US VIX reaches a certain point, it is followed by anything like 5 to 60 days of market improvement. So, are we already there, or is there more roiling to happen before we break into that September 2013 phase of market improvement? We have yet to see. But we have an interesting combination of circumstances. There is the non-farm payroll number, there is a Fed rate hike coming up, there is a huge quantitative easing that has been announced. You never know what China might announce on Monday. So it's too early to tell whether we are in the September 2013 phase or whether that phase will come after a month or 2 months.
Just to extend that point, and I think we'll have the call from Shakti Shiva as well. Markets normally bottom out within 3 months of the Fed rate hike, somewhere around normal 3 months. So we are close to a bottom in terms of time, but we don't know that bottom in terms of price. That bottoming out process at times can be volatile. So that's one point, and the market can remain irrational longer than you can remain solvent. So that's just one point that you should keep.
No, I do not know whether we are more like in the July of 2013 scenario or September. If you are in the July, then we are another 60 days away from the kind of killer moves that can come. But I'm only saying that September is a very eerie month. It reminds me of how things turned so sharply in 2013.
Okay, well, you know what? It's the weekend. It's Friday, and it is also the onset of Janmashtami, which is a festival that everyone celebrates. So, when you spoke about the mind, the one thing that came to my mind is one of the teachings, you know, of Krishna to Arjuna, where he says that the mind acts like an enemy for those who don't control it. So, I guess for all the traders, they need to just control their mind in this environment in such a volatile phase.
She belies her age, doesn't she?
Okay, well, you remember some things from your childhood, right? But here